As Americans look to get away this summer, there are concerns that higher prices could impact consumers making travel plans. With more than 30 brands in the portfolio at Marriott, there's no one better to ask about this year's summer travel trends than our next guest, Marriott President and CEO Tony Capuano.
Thanks for having me.
Is it a good environment for you, or
it's a great environment?
Is it offset by inflation at all, or?
Well, you know, for us, inflation's a little bit of a double-edged sword. Hotel rates contribute to inflation, and as you know, through the recovery, the pricing power we've seen has been pretty remarkable. The flip side of that is, as consumers feel pressured by the impacts of inflation, they get a little more cautious in terms of their spending.
You know, I don't like to admit that I like luxury brands, but God, I love luxury brands. And you have a lot. You have quite a few. Is it bifurcated now? Is that a better place to be? Or
I don't know if it's better, but it is certainly one of our strongest segments. We're lucky to have the industry's largest both footprint and pipeline of luxury. We have over 500 luxury hotels globally, another 250 in the pipeline. And the resilience we've seen for luxury travel has been one of the real bright spots in the recovery.
Because the worst Ritz-Carlton is great. That's some other expression, I think.
Hawaiian Islands? You could...
No, yeah, right. The worst Hawaiian Islands is still the best place. And then you got St. Regis, too, don't you?
We have St. Regis, we have Edition, we have W.
Oh, Edition.
We have our partnership with LVMH for the Bulgari brand, which just opened its 9th hotel in Tokyo.
Is that the business traveler? How important is business travel to those high-end luxury, and how much of that is consumer?
Yes, so business travel is the tortoise in the tortoise and hare of recovery. We've seen quarter after quarter of slow, steady recovery, and you almost have to look at the business traveler in two buckets. Small and medium-sized business recovered to pre-pandemic levels years ago. The big multinationals have been slower, but even in Q1, we saw globally 1% increase in revenue per available room in business transient. It really depends on the business where they land in the quality tiers.
Was there a time when you didn't rent? There were rooms available, but you didn't rent them because you couldn't staff the hotel to the
I think it was less about staffing and more about in the early days of the pandemic unfolding. We had a quarter of our portfolio shuttered. We had a big chunk of the portfolio running single-digit occupancy. And so if you're in those sorts of dire circumstances, you're probably only operating a few floors in the hotel.
And that's not the case now.
No.
What about hiring people? And do you have to pay up for good people?
Yeah, in many markets, wage rates continue to increase. But if you look at the number of open positions in the U.S., our biggest market, pre-pandemic versus today, we're essentially back. We're never fully staffed. Even though we have industry-leading low turnover, it's an industry that does have some measure of turnover. And so on any given day, we've got 4,000 or 5,000 open positions.
If I was on the Federal Reserve and I was trying to figure out how inflation is going to be faring, I mean, I'd be asking you about those wage increases. Are they outstripping the level of inflation that people are expecting these days, and do you think that will add to pressures to inflation down the road?
They were for the last couple of years. They're starting to settle into a little more normal kind of inflation parallel pace of wage growth.
How's international, and where is it happening?
International
there's a horrible war still going on.
Well, to be sure. In the first quarter, globally, we saw RevPAR growth of 4.2%, only about 1.5% here at home, 11% internationally. And if you go a little more specifically across Asia Pacific, we were up over 16%. So that's where we're seeing the strongest demand patterns right now.
I have to laugh. Obviously, you need to visit a lot of these places as the CEO. Do you have a favorite luxury spot? And I'm going to get back to business, but do you have a favorite where you've been? You have to go.
Yeah, I have lots.
You have to go. to check it out.
Obviously, I'm partial to Italy, so I love the St. Regis in Rome. I love the new Bulgari in Rome, which is a spectacular hotel. But across Asia Pacific, we have some remarkable properties. I've been lucky enough to go to the Maldives, which is an incredible
You've told me about the
destination.
Maldives before.
I'm waiting for you to go.
I know. I got a lot of places to go. I hear that Dorado Beach.
Dorado, Ritz-Carlton Reserve in Puerto Rico.
That's another.
That's a great hotel.
How many?
One of the original rock resorts.
How often are you opening a new hotel in China?
Well,
is that slowed?
It slowed as a result of the pandemic. But what was interesting is we saw little to no fallout in the pipeline. And we've got a big pipeline. We've got over 400 hotels in the China pipeline. Some of those projects were on hold, but for the most part, they've really
400.
Yeah. On top of over 500.
They have a lot of
open.
people, I think. 400 in the pipeline. 400.
Yeah, so we're quickly on our way to 1,000 hotels in China.
We were talking Taylor Swift in the commercial break ahead of time. Can you talk a little bit about what the Taylor Swift effect is? Because we hear it has an impact on a city like Chicago, a huge boom. Well, I mean,
she's a force of nature, to be sure, and we're very proud to have a partnership with her for this leg of the Eras Tour. Smith Travel did a study last year and suggested that the impact of her tour actually raised RevPAR in the U.S. by a point or two, which is pretty remarkable. But it's part of a broader trend, and that's this notion that with increasing frequency, people are planning their travel around big events, whether that's an F1 race, Super Bowl, Taylor Swift, another concert, and that's been a big driver of leisure demand.
I think she's in France now.
That's right.
Do you know? I
She
think.
was in Sweden recently.
Comes back here for a little while, but
I know she's going to be in Miami.
Yeah.
I don't know what other cities.
I don't think of it. And you've seen one of her concerts, right? Can you imagine doing that one night and then doing it again the next night?
No, some of these cities she'll do 3 or 4 concerts in a row. It's remarkable.
You have to really like
the Broadway shows where they do 2 on Wednesdays.
You have to like
exactly.
you have to like doing it. I think so. If you were gearing up for what's going to happen this summer, are people driving and staying at Marriott's? Are they flying and staying at Marriott's?
Thankfully, both. I mean, you mentioned at the introduction that we have more than 30 brands. So we operate across multiple tiers. In fact, we've just this year entered the mid-scale tier for a more value-focused consumer. And so we have folks going to drive-to destinations, fly-to destinations. When I look at the forward bookings for July 4th weekend, we're up a couple points over an extraordinarily strong 2023. And then when I look at outbound into Western Europe, our forward bookings are up about 7% into France, Italy, Greece, Spain, those types of destinations.
So as let's say you want to be the best CEO in the United States, what do you need to do? Is it logistics? Is it your computer system? Is it bon voyage? Is it restaurants? Do you have to have great food, great restaurants?
It's all of the above.
It is? You must be busy.
For us, it's really making sure we have the right product everywhere our guests and members want to go for every trip purpose. So you mentioned your affinity for luxury, but when your kids were younger, they might have had a soccer tournament.
I aspire to that.
And you'd look for a more value-focused. And so really our objective is to offer a terrific experience across all price points everywhere you want to be.